What is a secured credit card? If you're trying to build or rebuild your credit, one of the best ways to do so is by making consistent, on-time payments on a credit card. But you need a credit card to make payments on one. Yet, it can be difficult to get a credit card if you don't already have a payment history. Should you find yourself in this catch-22, a secured credit card could be a way around it. What is a secured credit card? A standard credit card is unsecured, meaning it provides an instant, short-term loan without the need for collateral to get that loan. A secured credit card, on the other hand, is secured or backed by collateral in the form of a refundable deposit made by the cardholder. The deposit amount is typically equal to the secured card's credit line. Should a cardholder default, the card issuer can use the deposit to help recoup any outstanding balance owed to them. The security deposit makes a cardholder less of a risk, so even people with low or no credit scores can usually be approved for a secured card, so long as they can make the security deposit. Otherwise, a secured credit card works similarly to an unsecured credit card. You make purchases with it, you're billed monthly, and then you make payments. Your account activity, just like with an unsecured card, should be reported by the card issuer to one or more of the credit bureaus, which helps you build a credit history. How to use a secured credit card to your advantage. 1. Accentuate the positive in your payment history. Payment history is the #1 factor in determining credit scores, and building a payment history is one of the main reasons to get a secured credit card. Make the most of the credit-building opportunity a secured card offers by paying your bill on time every time. That means always paying at least the minimum amount due and ensuring your payment is received by the due date, not just made. Consider taking steps to help ensure consistent, on-time payments, such as setting up auto-pay or payment reminder notifications, or make payments online or via a mobile app to avoid mailing delays. 2. Keep your credit utilization on the low side. Your credit utilization ratio is how much revolving credit you're using in relation to how much revolving credit you've been granted. This important ratio is a major factor in calculating credit scores, and keeping this ratio below 30% is advised by many financial experts. Keeping a secured card's outstanding balance below 30% of its credit line should generate a healthy credit utilization ratio, which can contribute to a healthy credit score. 3. Practice good credit habits. Practice makes perfect, and making on-time payments and managing your credit utilization are two habits that, if exercised consistently, should stay with you on your credit journey. Other good habits to develop include not making credit card purchases you can't afford and paying down outstanding balances as quickly as possible to minimize interest charges. 4. Graduate to an unsecured credit card. A secured credit card is not designed to be a forever credit card. If managed effectively, it can serve as a stepping stone to additional credit that may include an unsecured credit card. Some card issuers may offer you an unsecured card once they feel you've built a positive payment history and demonstrated responsible account management. If you like the issuer of your secured card, you're welcome to contact them to discuss upgrading to one of their unsecured credit cards. Or you're free to apply with an unsecured credit card with any issuer at any time. It may be prudent, though, to wait until you've built a positive payment history of at least 1 year. If you do graduate to an unsecured card, keep exercising the same healthy habits you did with a secured card that got you there.